when you were producing your forecasts, you were taking CPI as 2% over the period in question and an RPI of 2.4% in your forecasts. So a 3% cap on fare increases would therefore be likely to increase fares by more than either of those measures of inflation during the period in question. Is that fair? And your proposal sees fares rise above inflation for year one, so that's the first step increase, and then maintain a rise in line with inflation.
They're rising in line with CPI.
So the difference between straight inflation rises and any other kind of rises is in year one alone. So when we go from current prices to the new price, there's going to be a rise greater than inflation, but then once that figure has been set, it will rise with inflation.
That's
throughout this.
Yes.
That's the
So
same.
initially rebasing,
Yes.
and therefore we're keeping in line with CPI.
And so the rise for Class F cars, but also for trucks and coaches, is an 18% rise in the first year. Is that right?
Need to refer to basically going from £5.30 to £6.26.
And so if that's an 18% rise, that would already give you a head start against inflation. But the initial revised price could be set lower than 18%, couldn't it? Something like, say, 12%, and still account for inflation over the past 3 years to give you a more realistic starting point.
There are a number of models available there. The ferry company wants to go back to when the prices last rose and to account for actual inflation that has happened in the period since. So we want to rebase. What we're trying to take into account is the fact that the 2021 order allowed us to increase figures at a rate, but the rate that we were able to increase at was much lower than the resultant CPI in those particular years, and therefore we lost income as a consequence.
So, do you say that it's essential that you have that steep upward first year increase?
Yes, because otherwise, if I don't rebase, then that means that I will not get to the income levels I need in order to satisfy the test we've been talking about having sufficient profit after tax to be able to make transfers to the ferry replacement reserve, to be in a position to purchase a new ferry, and also potentially to even make a dividend payment to investors, if that was possible. But it wouldn't give me sufficient comfort if I didn't have to rebase it as a starting point to be able to get to the basic point of having a surplus on ferry replacement reserve and a degree of comfort.
Did you get to the first year increase by taking the present value and multiplying it by something to take account of inflation? Or did you get there by starting with where you wanted to be for the ferry reserve and working backwards?
No, we basically started back as to where we were, and then moved. So we went backwards in time and then have inflated the figures by inflation to get to a starting point here. And then we move forward then, inflating those figures by CPI based upon what we forecast the CPI will be.
So to get to the starting point, you took the old price, you worked out what the inflation had been since it last rose, and you applied that. And
That's
then
correct.
from then on applied CPI. Thank you. So there's been much made about the Class BC pedestrians and bicycles charges. They're due to rise in the initial rise by 75%. That's considerably in excess of inflation since the last inquiry, isn't it?
But not since they last increased. So pedestrian fares last increased, from memory, in 2009.
So what you're saying is the inflationary pressure on cars is calculated from the 2021 order, but the inflationary pressure on pedestrians is calculated from 2009.
Essentially, we're saying that because the fare for cars has increased based on the outcome of previous applications, and therefore has kept more in line with inflation, albeit it hasn't kept completely in line with inflation to get to the rebasing point. Whereas pedestrians, pedal cycles, motorcycles have not increased at all, and therefore the fare for those classes has stayed static, and effectively inflation actually got cheaper for the last 15 years or so.
As I understand it, you will be generating an increased total fare income from those classes A, B and C from about 6% to 8% of total income. The consortium has calculated that that's about £133,000 greater in 2025-26 than in previous years. And in terms of additional income generated, that 2% difference is a small proportion of income, isn't it?
If your income is forecast to be in the region of, say, £4 million, and you're talking about £130,000, then it is a smaller amount of that, but it is not an insignificant amount. And over the forecast period, £130,000 over 10 years, allowing for subsequent inflation at a guessing level, will yield round about upwards £1.8 million worth of additional revenue. So over the forecast period, it is a significant amount of money. And when we're talking about the possible surplus or shortfall in the ferry replacement reserve, that is a very material amount.
But that means that the company is proposing to increase the income from those classes of passenger in a different way to the other classes.
Only in so much as it is rebasing what the starting point is, and it's rebasing over a longer period than other classes. But once the rebasing has been put in place, it is looking to increase the fares on those classes at exactly the same rates as it's looking to increase the fares on the other classes.
So you would not regard that very much higher proportionate initial increase as unfair?
No. Because of course, any of those purchasers of tickets also have a facility, if they so wish, to purchase advance tickets, booster tickets. And for pedestrians, they could purchase tickets of 50 or even 100, and therefore get an additional discount.
So the discount of, say, 20% would be negligible if the cost of the initial fare had gone up by 75%.
But the company is actually looking to give a greater discount if the application is accepted in the next 4 years. And also, it should be pointed out, the company has also suggested that the actual implementation of the rebasing was going to be put back as well. But they have sought to actually spread the discount and make it more attractive to buy booster tickets, and otherwise might have been the case.
I appreciate that it's not part of the company's remit to promote any particular form of travel over another, but increasing those classes of fare by that much is going to discourage rather than promote that kind of passage in the ferry, isn't it?
That would be pure supposition.
And are you confident that with those increased prices, income from those classes will increase rather than diminish?
When you say increase, what do you mean by that? Do you mean?
Well, maybe I'm not sufficiently precise. Are you confident that with that increase in prices, even allowing for the discounted books, there will be as many or more passengers in classes A, B and C in the future as there have been in the last 6 years?
I can't make that assumption because I don't know what the passenger trends may or may not be. What I've assumed when I've done forecasts is to assume a static level of passengers carried.
You mentioned discounts. I'll move on to discounts. The proposal is to go down from 28% and 32% discounts to 15% and 20% discounts. Is that broadly
In the
correct?
long run.
In the long run.
Which is still higher than they have historically been if we look back in the past.
Can I ask you to look in bundle 4, please, at page 46? This is in the appendices to the consortium's proof of evidence, document OPJ 134 1B, appendix C. 46. These are the comparison tables with other ferries. The consortium accepts that no comparison between this ferry and any other is going to be an exact one. But table 2 on this page, crossing discounts comparison table by percentage and type of user, shows that in percentage terms, the company's discounts are at the very lowest end of the range, even compared to the King Harry and Dartmouth hire ferries. That's particularly the case for cars, where the company's 28% discount compares against a range of 48 to 68% for other ferries. Is the case for reducing the discounts over time exclusively a financial one? That is, the maths doesn't produce the needed profit unless the discounts alter. In other words, is the only way you can get your profit after tax to meet the reserve fund by reducing the discounts?
So I fail to see where we're talking about this table.
Well,
question.
Okay, on this table we have discounts of between 48 and 68%, for example, for car passengers using either the Dartmouth hire ferry or the King Harry ferry.
Okay, but at the end of the day, I don't know what the actual forecasting methodology these ferry companies use. I do not know what the costing of these ferry companies are. I do not know. I haven't seen the accounts. I haven't seen anything like this in terms of detail. So I can't make any comparison between the discounts that are being offered by any one of those ferries and the model that we are using for our discounts.
Are you reducing the discounts because it's arithmetically necessary in order to meet the payments into the ferry reserve?
No, we did not approach it like that. We approached it on the basis that we would try to set the discounts and what would be acceptable to the purchasers of tickets. We tried to, if we go back in history and we look at previous discount rates across all the classes, they were less generous than the long-term discounts which the company is proposing in this application.
Thank you.
And essentially we're trying to encourage people to buy great tickets if they can to get a discount.
The income, the figures that have been provided by the company suggest that there were 75,471 single passenger foot tickets sold. These are figures on the table that you had difficulty reading, I'm afraid, page 41 of model 4.
I'm familiar with that.
You are familiar. And the discounted books, the 50-foot passenger books of tickets, 22 were sold, and the 100 tickets books, 26 were sold. So the total income from the books of discounted tickets came to £3,210. So, albeit that over 10 years that could be a larger sum, obviously, it's very small in the overall income picture, and that the fact that those so few books are sold, doesn't that reduce the case for changing the discount?
No, I disagree. I think at the end of the day, the current fare is relatively low, and therefore there isn't the incentive to buy books and tickets, and it may be that the fare going up, that passenger, for passengers or bike or motorbike passengers, maybe that's just more. I cannot comment with any degree of certainty on that because that is just a supposition. That's what I think may be the case, it may happen. But that's trying to comment on human nature.
Finally, the toll on the motorway. You've said in your evidence that the toll is to be comparable with the toll for a car using the ferry. But I don't believe you've told us how you've actually calculated the level of toll to be levied on the motorway. Could you tell us how you came to the price point?
I think you're better talking to Mr. Keane about the motorway. Mr. Keane has got the backing information behind that in terms of observations.
So would it be fair to say that Mr. Keane said to you, here's the pricing structure, can you fit it into the forecast?
I've seen the calculations Mr. Keane has made, the assumptions that Mr. Keane has made, and I worked those into the actual projections themselves. Mr. Keane is more knowledgeable in terms of the ferry, so the motor road.
I understand. You're saying that they're his figures. You've seen them, you've used them, but you're not responsible for the figures, and I should speak to him about those.
Yes, I will speak to him directly tomorrow.
Thank you. Thank you very much.
Thank you. Mr. Rand, do you want to re-examine now, or do you want to wait until the parties have?
I was saying those re-examination, but so it might be helpful
Yes,
to you
it's fine.
for your notes to do it now. And it's turn up please, bundle 3, page 37, and it's the point you were asked about discounts. It was put to you that the proposed discounts are 10 and 15%. I think the question was primarily focused on pedestrians. But if you could look at page 37, please, because you appear to agree with that. And if you could look at the column 1st of April 2025, do you agree that in fact the proposed discount for 50 pedestrians is 43.18%, and the proposed discount for 100 is 46.32%?
Yes.
And then do we see that discount taper down, but then settle on the 1st of April 2028 at 24% for 50 tickets and 28% for 100 tickets?
Yes.
And do we see that same basic pattern of a large discount in 2025 settling to a lower but steady discount in 2028, also following for the other classes of travel?
That's correct.
Thank you very much. So, Dr. Langley, I think you wanted to ascertain this.
I need a microphone, I think.
Would you accept a handheld? Is that
Sorry?
handheld microphone? Okay.
Might need my hands free. I think I might be able to get.
Do you agree that between 2024 and 2034 at least, the company needs to raise about £8.5 million of cash to meet its target for the new ferry as a minimum? That's based on a ferry replacement reserve of around 12.5 million in 2034 and a current balance of 4 million. So it's roughly
That's right,
8.5 million,
yes.
roughly 8.5 million to be had between now and then. Can I ask how the cost of the new ferry compares with the cost that was estimated in the 2020 inquiry?
Well, the cost of the new ferry has gone up. In the 2020 inquiry, we estimated that
maybe it'll help you actually.
it's 12.415 million, I think. I can't see it on the sheet.
It was 12.795 million in 2032, I believe, in the 2021 inquiry. And that was for a diesel hydraulic ferry, is that correct?
I understand so.
The current expansion memorandum is suggesting that you're looking now at a diesel electric ferry, which is more expensive than the one in the 2021 inquiry. Is that also correct?
I believe so, but I would actually ask those questions to Mr. King because he knows far more about the operating requirements of the new ferry to be.
Well, this really doesn't do
What
with
is
the
going
cost.
to be the most sensible option for the company to acquire.
Sorry, this is really just to do with the cost differential between those two options.
There may well be, but I am working on the basis of the actual figures that the company believe will be needed, or the ferry that the company believes will need from 2034 onwards.
And my understanding is that the switch from a diesel hydraulic version to a diesel electric version actually increases your cash requirements by £2.4 million.
Can the page reference please be given for that evidence?
Yes, it's in the 2020 inquiry bundle, appendix 11.
Sorry, I don't have the inquiry bundle. Has that been submitted into evidence by yourself?
Yeah, it has.
Where is it?
It's at the tail end of my rebuttal evidence.
Is there a page number on that, please?
I can try to find you one. I don't use the rebuttal evidence, sorry, the bundle page numbers. Can somebody find, where is my submission in
Bundle 4,
the bundle 4?
out to page 204.
Bundle 4,
That's your rebuttal statement.
204.
So I think the page you need is bundle 4, page 279.
279. Yeah, 279. So the valuation that the current ferry costs are based on is this 2019 valuation, and it shows there that the replacement cost of diesel electric drive is 16% more expensive than with 8.4 than diesel hydraulic drive. And 16% of 17.5 million is 2.4 million. So my conclusion is that the ferry cost has risen by £2.4 million between the 2020 inquiry data and the current projections. And therefore the comparison that was being made earlier between the 2020 inquiry results, the FRR and so on, is not equivalent. They're not equivalent. So can you confirm that?
At the end of the day, what I can't comment on, okay, I can comment on the fact that there is a difference and the costs have increased, but there is also a commercial reason behind why we feel that a different type of ferry will be more appropriate for replacement. I can't comment on that.
I'm only asking you to confirm that there probably was a 2.4 million uplift in your cash requirement as a consequence of that decision.
That's what I'm saying.
So?
But there will be a reason why, which I can't comment on, from a commercial point of view, we feel that the change in nature of the ferry, in terms of its drive propulsion, is different. And that is not for me to comment on. I don't know the answer on that.
I'm only asking you to confirm the number.
I have. I've confirmed it. Yes, okay, it's a higher figure.
So
But I'm saying there is a reason behind using a higher figure that I can't comment on.
I accept that. Nonetheless, that £2.4 million could have been used to pay shareholders, for example, if a different decision had been taken. And it's actually a significant increase in the cash requirement between now and 2032. It's 2.4 million out of 8.5 million. So it's actually engineering a requirement for more income over that period. Would you agree with that?
That is one take on it, I agree.
Thank you. Would you agree that the business worldwide has suffered the transient effects of COVID, and the ferry company in particular has suffered problems recently with outages from the ferry?
No. All businesses are different. This ferry company has got its own unique set of circumstances. And to compare this ferry company with any other business may not be comparable.
Sorry, I obviously didn't phrase that very well. What I meant to say was that the COVID pandemic was exceptional, and also the reliability problems that you had in 2019 and 2023 were unusual. It was ferry was out for a long time. So would you agree that that was a transient hit on the finances?
Yes.
So, given that it is a transient effect and things are changing, it would be reasonable to assume, I think, that the future hasn't settled yet. Would you agree with that?
It's very difficult to actually assume the future has settled or not settled. All I can do is look at what the historic position is telling me. The historic position is telling me or suggesting to me that we may be settling at a much lower traffic volume than has happened in the past.
Yes, so on that note, could we turn to paragraph 38 again in your proof of evidence statement, which I think would be under 3. At 1, so under 3. Anyone give me paragraph number 38?
It's page 6. paragraph 38
There
of
we go,
page
page
6.
6. So, do you have the figure now?
I have the graph in front
The
of me.
graph in paragraph 38. You show there a line, a linear estimator of what has happened in the past and projected it into the future. That line is based on points between 1998 and 2018, and then 2024 is added into the calculation. And the bits in between are missed out. Unfortunately, that calculation is not correct. Have you checked it?
In what way wasn't it correct?
The line is too low. It isn't.
What's too low?
The purple line, the straight line, the estimate is too low on the graph. So the future volume, if that trend tells you anything at all, and it probably doesn't, but if it tells you anything at all, then it's too low. And I did, in my evidence, show the correction to it.
Which moved it up by
Which moved
a
it
couple
up.
of points.
But perhaps more important, why is there an assumption that there is a linear relationship between traffic volume on a ferry and time, which clearly wasn't the case between 2018 and 2024? So why would it be a reasonable estimator of the future?
I use a linear extrapolation simply because it is simple. We didn't include, as you just said, the figures from 2019 onwards. So we were just looking at, there has been a decline. Over 20 years, there has been a gradual decline in the ferry traffic. And what I wanted to do with this line was to highlight that particular point, that over time, on average, there has been a steady decline in ferry traffic. And therefore, in my view, it wouldn't be prudent to assume an optimistic increase in volumes moving forward, because history has shown me that that has not been the case.
That line though is actually above the target, that the traffic volume that you've actually predicted until beyond 2040, certainly beyond 2034. I think even beyond 2040, the corrected version, even beyond 2040.
So I beg your pardon, can you refer me to something I can see what you're saying?
I'd have to be using my evidence to do that. If you would like to see it, it would be bundle 4. Where are we again on line? Summary rebuttal statement.
It's in your rebuttal statement. So 2.6, I think, shows
206. Yeah.
table,
206 and bundle 4. So 206 in bundle 4, the red line is your prediction of shall I say, the traffic volume you used in your forecasting for the application. And you can see it's significantly below the level in 2024, which is the end of the
7.6%.
Yeah, 7.06% below that. The chain dotted line on that graph is actually just the average of the traffic from 1998 to 2018, which I guess is another straight line that one could draw for that data. And there's a big gap between the two, as you can see. So you can draw all sorts of straight lines on graphs, and none of them necessarily actually predict what the future is. And if you continue on to, let's see the pages. Yeah, if we continue on to page 212, which is essentially the same graph with a few extra lines added. But the red line again is your prediction of future volumes. The dotted line above it is your calculation of the linear estimator. The dotted line above that is the correction to that. And the dotted line above that one is a linear estimator just based on pre-COVID data, which shows that, indicates a decline which is slower than yours. And then again, the chain dotted line at the top is the average of the data. So I suppose what I'm saying here is there are lots of ways of projecting things into the future. Would you agree that they're all, every single one of them, subject to guesswork to an extent, or inaccuracy?
If you're predicting over a period of 15, 16 years, there will be a degree of estimation. There has to be. We have to make some assumptions.
And your assumption is very low.
My assumption was very low because I felt that traffic volumes were not going to increase to pre-COVID levels at all. Looking at historic data of what's happened over the last 4 to 5 years, to where we are at present, is not indicating a recovery along the lines that the consortium in itself are predicting. Now I contrasted that because I, as discussed with Mr. Reynolds, produced another set of numbers in my second witness statement for the rebuttal, where I actually said, okay, 2024, I will increase that by 7.06% and apply that as a straight line. And if I apply that as a straight line, then that would move my red line shown in your table, or figure 3, up by quite a few notches. And what I said on that was that even with that increase in traffic volume, we're still not going to be in a position to cover the matters we were talking about earlier.
With the 2021 on the tolls.
So,
With the 2021 on the tolls.
with the 2021 volume in place.
Can I just confirm that the projections with the 2021 road tolls don't include the road tolls? Whereas with your toll
The
benefits,
projections
they
for
do.
2021. So, so correct me if I'm wrong, are you saying that if we keep the 2021 order in place, then those projections do not allow for a road toll? That is correct.
Yes, so I guess that needs to be borne in mind when making a comparison between the 2021 projections and the new toll projections.
Yes, because we have included road toll income on the basis that the application is approved.
Yes.
We're not seeking to bring in road toll income in addition to the 21 only.
So, turning to how you arrived at your 7% below 2024 levels, the calculation that you did, which results are shown on page 7 of bundle 3. So you took two data points, just two, 2018 and 2024, and calculated the difference between them, with the reduction between those 2 points, and then subtracted that from the 2024 traffic. Is that correct?
Yes.
Actually, it isn't correct. It's half of that.
Disagree.
So,
So we have the traffic volume in 2018.
traffic drop volume in 20, I will explain. It's explained wrong, I'm not questioning the answer, but it's actually, the 2018 volumes are about 14% higher than 2024 volumes. And half of that is 7%. And that is the amount by which you've chosen to reduce Class F traffic. Is there anything other than educated guesswork involved in that calculation?
In that particular calculation, it was a bit more than that because what I was looking to do was provide some degree of comfort that when we get to the end of our period of 2032, we will be in a position where the ferry replacement reserve could be of a sufficient magnitude to allow us to place the order. But also, I needed to give some comfort as to a margin to cover unexpected outages, costs, unexpected outcomes. So there was a degree of thought, thinking both ways on that, and I took that particular figure.
So it is essentially searching for a volume that you feel comfortable with. There's no a priori reason why it is 7% down. It could be 6% down, 10% down, or 4% down, depending on where you feel
I could
comfortable.
have applied a number of different volumes in there. You're quite right. I used this particular one, which was based upon simple mathematics to get a figure to move forward, and I assumed that traffic volumes would not change over the forecast period to 2040.
Yeah, which would you agree actually that what you're saying there quite reasonably is you're expecting the average traffic over that period to fluctuate around that lower level, because it certainly won't be static, will it?
Yeah, that's right. It will fluctuate. It will never be exactly the same from one year to another without that.
Can I just turn back to the explanatory memorandum then, which I think is CBD2 in bundle 2, is it bundle 1? Bundle 1.
Bundle 1.
Explanatory memorandum. And we need paragraph 7.2.5.
So have your page number, please.
Yeah, well, I'll find it for you. So in paragraph 7.4, it is said.
Can I have the page number, please?
Oh, sorry, I'm sorry. 15 in bundle 1.
So 15.
Page 15.
So which bundle are we talking about?
Bundle 1.
Bundle 1.
Is it bundle 1? Yes. Yes, it is bundle 1, yes.
I'm with you.
You're there? Yep. So, explaining there some differences from the last application, it says, between the making of the 2021 order and this application, the ferry company's financial position has significantly deteriorated. This is not due to a lack of passengers. Indeed, in many instances, traffic volumes have increased. but it's largely due to external factors. And if we go forward to 10.2.5, which is on page 19, says, despite cash toll levels increasing and the ferry company carrying more vehicles, it is seeing lower levels of revenue than expected. So both of those statements would imply that the company is actually carrying more traffic than it has in the past. And then in Appendix 1. Somebody find me Appendix 1.1 in the first appendix, the explanation of the financials.
Page 26.
Page 26, is it? Oh, yeah. If we look at 1.1.2, paragraph 1.1.2, it clearly says there that the income is calculated based upon toll fares in Appendix 5.1 applied to the average of 2018 and 2024 traffic volumes. So the forecast in the original explanatory memorandum seems to have been, it was intended that they should be applied to the average of 2018 and 2024 traffic volumes. And that comment is repeated again in in Appendix 5.1, for example, of the financial projections. So do you agree that that was the intention of in the explanatory memorandum?
No.
No. Can you explain then why it doesn't say that?
No.
And would you agree that the average of 2018 and 2024 traffic volumes happens to be 7.06% above 2024 levels?
Yes.
Yes, because of the calculation that you chose.
That's right. And that's what we have subsequently used in the December 24 additional disclosure projections.
So the expansion memorandum was just wrong, was it?
I can't tell off the top of my head whether it was wrong. Okay, I hear what you're saying. I'll need to go back and have a look at it in more close detail to be 100% sure.
Well, a lot of evidence has been submitted to show that that was the case. Okay, let's move on from that. One thing about this, coming back to the transient effects of COVID and reliability issues, is obviously the reliability of the ferry is a factor in determining whether people use it. If you want to be certain that the ferry is going to get you there. And there have been, the last few years, it has been not as bad, not as good rather, as it has been historically. Do you not think that it's possible that passengers have been deterred in the recent past by reliability issues, and that if the reliability improved, the traffic would return?
That would be pure supposition on my part. I don't have anything to evidence that whatsoever.
Okay, let's turn on to other things. dividends. Would you agree that return on investment has to consider both capital gains and income, i.e. dividends?
I think that is a very tricky discussion to be had in connection with this company. We're a private limited company. We are carrying a degree of risk which is not necessarily the same level of risk. It might be deemed to be higher than an average trading company. I think if you were to factor in the increase in net asset value, then arguably that would increase the return. However, I would point out that if you were to look at the whole period from 2024 to 2040 and take into account the increase in net asset value, with that taken into account plus the dividends in the scenario of the December 24 additional projection, my calculations suggest that if that was a measure that was acceptable, the average return is 3.4% over that period, which is still significantly less than the return that one would expect investing in the stock market, and certainly less than the return that one would expect investing in a private limited company with a high risk profile.
Nonetheless, over the period, say from 2024 to 2032 or 2034, when no dividends may be paid to shareholders, there is actually around £8.5 million worth of extra cash flowing into the company.
Yes, but I think then if you also look forward, you're going to go out and you're going to buy a brand new ferry, and it's arguable you're going to spend £17.5 million on a ferry, and what is the actual carrying value of that ferry, the realisable value of that ferry from day one when you take it into operation? The ferry is being built for a very specific purpose, which is to run between Studland and Sandbanks. It is a chain ferry, it is a specialist piece of kit. I suggest to you that the resale value of a brand new chain ferry falls significantly once it goes into operation and is in use. And as a consequence, the net asset value of the company will fall as well as a consequence. So it's like an extreme example of buying a brand new car and driving it out of the showroom.
Sorry, I didn't understand that. The net asset value won't fall, will it?
But it will do if you go. The company is obliged under FRS 102(1A accounting standard to revalue its assets on a realisable basis. The company in 2035, 36, 37 onwards will need to take a view on the value of the ferry and its carrying value in the accounts. I suggest that the value of the ferry, we're depreciating it in those projections over its estimated useful life, but it may be that the carrying value of the ferry will fall down faster than we're depreciating it at, which will affect the net asset value of the company and hence affect the amount of shareholders' funds.
But you haven't actually forecast that, have you? You have just depreciated. You've depreciated the new ferry over a 40-year term.
I've depreciated the ferry over a 40-year life from 2035 onwards. Because at the end of the day, I'm not in a position, I'm not a valuer, I can't comment on what the ferry value will be once we take delivery.
The current ferry has never been written down in that way, has it?
The current ferry has been revalued from time to time, and the estimated residual value of the current ferry is circa £150,000, which is effectively its scrap value. So the valuation of the ferry, and I forget exactly, I can look it up on it's in the company accounts of when it was last valued. The valuation less the estimated residual value has been written on a straight line basis over the remaining period of its life up to 2034. So that is exactly the same basis as we have applied in the past.
Notwithstanding that, I agree the revaluation could affect net asset value, but you don't show it in your projections. More important, I would have thought from a shareholder's perspective, is the present value of the returns that new ferry could generate from 2034 to say 2074. And what is happening really is that the shareholders, if we assume they get no dividends between now and 2034, 2032, whatever, the £8.5 million of cash has flowed into the company. They can buy a new ferry. That unlocks another 40 years worth of potential profits. So the shareholders will be thinking in their heads, do we think this is a reasonable return on what we have invested in the company? And the fact that they're not getting a dividend between now and 2032, they would just say, well, that's the price we have to pay because of the position we're in and the future opportunity that it unlocks. So would you agree with that analysis?
I think in some ways you'd better ask talking to Mr. King about that and his view on it. After all, the ferry company is essentially part of a group of companies that he's a shareholder of, and he would have a view on that. I can only prepare the forecast and tell you what I have done in terms of preparing the forecasts and where I see the position going forward. Now, come 2035, once we've taken delivery of a new ferry, we have to start providing for a replacement ferry. And it's been suggested, I believe, in your submission, that replacement ferry come 2074 may need to be in the order of £55 million.
I agree with that, yes.
Okay, who knows? But the key point is that moving forward, we take delivery of the ferry. We may have to be financing that new ferry. So we're going to have capital payments to make on that. We're going to have interest payments which we've got to bear. We're going to have significantly higher depreciation to factor into the forecasts moving forward. So the amount of profit after tax is likely to be we're not going to be in a position where we've got riches, is the point I'm trying to say. And we will still be in a scenario where we've got to build up a very replacement over a period of time. What we're trying to do with this is to get to a degree of certainty so that everyone knows where we're heading in terms of income, and we have a clear model we can work to, which is increasingly fares at CPI on a rolling basis, rolling annual basis, and it is all the risk is effectively down on the ferry.
Yes, the point I suppose I was trying to make was that there is more to return on investment than simply dividends in any particular period, and you really have to take a holistic view of the lifespan of the ferry before you can make a judgment on that.
I think you have to make lots of judgments because at the end of the day, the value of the company shares and the return you're getting, if we are not going to be in a position to purchase a new ferry and place an order in 2032, arguably the value of those shares on the open market will be somewhat less because of the risk that a potential purchaser would be undertaking.
Could the ferry company increase its share capital?
That's a legal question.
So
That's a legal question, given the.
I was going to refer to you. Yes.
Okay. Cover that another time. Talking just again about returns on investment, the total return on the FTSE at 6.8% has been mentioned as a comparator, but that isn't the correct measure to use, is it? It should be the dividend return on the FTSE. Do you agree?
I think it's a difficult one to call because different investors will invest for different purposes. Some will invest for income, some will invest for growth. And you're either at extremes or you're in the middle. And therefore, it is a comparison. What I was trying to illustrate with that is a published figure which is available in the public domain, which is saying what the average return has been investing in stocks and shares in the open market over a period of time.
Yes, but the total return is based on leaving the money invested in the market. Whereas the dividend return is based on taking the money out of the investment. So it's actually the dividend return which is comparable with dividends being paid by the ferry company.
The point I made was if you look at it from a total return in terms of capital and dividends, I believe that the return you're going to get over a period, if the application is accepted, would be an average of 3.4%, which is still significantly less than the 6.3 or 5% that I quoted in my statement for a comparatively risk-less investment from the ferry company.
Yeah, the ferry company, of course, doesn't have competition on its market, shall we say. So in that sense, it's actually lower risk than any other companies would be, because it's a monopoly. Do you agree with that?
The ferry company doesn't have another ferry provider running a service adjacent to it to give competition. But there is the option to take the longer routes and to drive around that. So there are options out there. Normally in a monopolistic situation, the user or the customer doesn't have any alternative. What I suggest to you is that there is an alternative, and therefore it isn't a total monopoly situation at all.
Agreed. You've projected returns on deposits of 2.2%, and the current return on 10-year gilts is 4.66%. Why are the returns on the growing cash pile as low as 2.2%?
That's what I forecast the long-term outcome will be, which is based on where we're heading with the Bank of England published forecast for RPI and CPI. And that's what we're suggesting, that the cash returns may be moving into the future. Yes, I accept that currently the gilt price on average is higher. We're just coming out of a period of high inflation.
But you could take your £4 million that you have sitting in the FRR at the moment and take out a 10-year gilt today at 4.66%.
That's a question you need to put to Mr. Keane, because Mr. Keane knows far better than I the actual finances of the company, what opportunities he has actually investigated and what has been made available to the company. Okay,
so your assumption is 2.2%, and it's actually pretty well level, isn't it, from 2026 onwards at 2.2% to...
That's right, because that's what the forecast from the Bank of England is telling me.
Mm-hmm. Do we have a revised draft statutory instrument by any chance?
I think that's a question for Mr. Reynolds.
I'm not the witness. If you want to raise points like that, perhaps now isn't the opportune moment. Perhaps in submissions.
Sorry, I just wanted to refer to some points in the draft SI.
That is something that I had thoughts I would raise at some point. So
Yes.
if you leave that with me, I will raise the principal point. Obviously, I don't know what detail you want in, but that is something to return to tomorrow.
Just one or two comments on one or two comments on the draft SI actually, which hasn't been covered, hasn't been touched at all so far. There's still talk about RPI, Retail Prices Index, but that's deprecated now by the ONS, who say it's not a good statistic. So why are we still using it? Why is it still being referred to in these
I believe
forecasts?
I've part covered that by what I was saying to Mr. Dubin about the actual expenses and the rate of increase the company had encountered of its expenses in 21 to 24. And I suggested that the expense increase the company had seen was significantly more than the RPI in that period. And because RPI is higher than CPI, I felt that that would be an appropriate figure to move forward. I appreciate what you say about comments about whether RPI is still valid or not. I also refer you to comments made by Rishi Sunak and Sajid Javid when they were Chancellors of the Exchequer that said they would continue to use RPI as a measure until at least 2030. So I'm not aware that has changed. So even though some places say that it shouldn't be used anymore, it is still being used by the government in certain circumstances.
I suppose my point was really that RPI itself is probably not that significant. It's the numbers that are used which is significant. And we have to remember that all of these forecasts are based on assumptions about future inflation, which may or may not turn out to be true. So, arguing over £100,000 here or there is really just guesswork, isn't it? These forecasts are all approximations, whoever produces them, whatever assumptions are made.
Yes, but equally at previous inquiries, the question of RPI versus CPI was discussed at length. And we are where we are, and we've prepared our forecasts on a similar basis to previous inquiries, which have been accepted by the inspector there.
Why did you? I'm sorry, it's a leading question again. Is it appropriate to forecast your costs rising faster than your tolls?
That's just reflecting what has happened in recent years. In recent years, we've had high inflation. Our costs have increased significantly more when we've been able to increase our toll income. Therefore, that seems like a fair assumption. We're talking about a margin difference here between RPI and CPI, which is what I'm inflating at.
Dr. Langley, can I just check, how much longer do you think you're going to be?
Very short.
Okay,
Very short.
So
We'll go through those things.
we'll continue probably worthwhile rather than stop you.
I would like to address the issue of the inflation of tolls as a mechanism for recalculating tolls or calculating tolls on the fly. And this really comes back to what's in, I guess, the wording of the draft statutory instrument. Would you like me to ask a question on that now, or will we cover that later?
We have the draft statutory instruments. I suppose actually, at the moment, you're cross-examining the witness, and are there questions you want to ask the witness about that statutory instrument? I don't think it's been raised.
It's an attempt to be helpful in this. It may be that Mr. Thomas has something to say or not on that, or should at least be asked, because the principle of increasing in line with inflation will not change in any further draft of the SI. So the question should be asked if Mr. Thomas is suitable for appointing.
Yeah, okay, we'll ask one or two questions then. At the moment we have, with 2021 audit tolls, we have a fixed schedule of tolls which are clear, transparent. It was agreed at the previous inquiry by the company that it was the best solution at the time. The statements in the 2020 inquiry from the company confirm that. Moving to a inflation-linked tolls answers one part of a complicated equation, perhaps, and that is, if inflation turns out to be different from what was thought of in this room today, then by linking the tolls to inflation, you remove some of the discrepancy between the company's costs rising and company income rising. Would you agree with that statement?
Yes.
But the other part of the equation, which isn't addressed, which is what happens if the traffic changes. So there are two important factors in this. One is what is happening to the company costs and what is happening to the company income. But the company income is tolls times traffic. So if you don't also make adjustments in tolls for traffic variations, you haven't actually solved the problem of essentially making sure that shareholder return is fair, rather than, shall we say, profits are at lower risk. So do you agree that traffic is also an important factor that should be included in any dynamic modelling of tolls?
That's why we include it in our projections.
No, I mean in the statutory instrument.
I cannot comment on what the statutory instrument is going to say. That's a legal document as far as I'm concerned. I'm interested in the actual projections, and I believe that the projections are factoring in traffic volumes and they're factoring in what the federal tolls will be.
Sorry, I obviously didn't make my point clear. If tolls respond to inflation, they should also respond to traffic. That's the point I'm trying to make. Do you agree with that?
If tolls respond to inflation, they will also respond to
No, they should also respond to traffic, changes in traffic limits.
So I failed to see, for example, why would that be the case?
Oh, well, because the target really here is to control shareholder returns at the end of the day. It's not to, that's the return on investment bit, really. So you're trying to control shareholder returns. If you allow tolls to rise with inflation, they may rise with inflation, but if your traffic forecast is low and the traffic starts to increase above that, then your profits rise, but that's not compensated for. So if you compensate for a rise in inflation, either way, you should also allow for changes, you should compensate for changes in traffic. in either direction as well. So if traffic volume decreases, you may decide that the toll should rise to compensate for that. Just as if inflation rises, you think toll should rise. So that is the point really, that the toll should be sensitive not just to price inflation, but they should also be sensitive to the traffic on the ferry.
Sorry, I didn't object to this question being posed. You could hear what it was. It's a question which is best addressed in legal submissions, because it's asking how is the SI to achieve the end set out in 1954 order, and that's a matter for lawyers and for yourself.
Yes. Can I just ask though, did you want to respond to that? Was there anything you wanted to add?
I prefer to go with what Mr. Menzies has said.
Yeah.
Sorry, could you explain that to me?
Your point is noted, but it's better that it's dealt not with by the witness, but by the submissions from the advocate.
I think that's probably good enough for now, thank you.
Okay, thank you very much. Mr. Reynolds, do you have any re-examination?
One question,
Okay.
I'm very mindful of the time. You were asked about what was said in the explanatory memorandum about increasing traffic numbers, and there was two references which were pointed out to be wrong, which you said you didn't know why. Earlier I took you to bundle 3 on page 43, where the traffic volumes were all set out there. Is that the definitive data that the inspector should work from? So rather than description in the EM, should he work from that data?
I prefer work from that data because that is historic fact.
And does that data, in fact, show that there's an increasing number in category F traffic?
No, it actually shows, this is page 43, what that's showing is that 2024 is less than 2022, which is significantly less than 2018.
I have no further questions.
Thank you. Mr. Fuller, did you want to ask questions of this witness now? Or questions been addressed?
I'm hold you on time. I think I have two sets of questions. One set as a result of the discussion which has taken place today, and one set of questions which I might have wanted to put to the witness in any case. So perhaps that provides a natural dividing line, given that our attention is on events today, and I can try and be quick.
How long do you think it would take?
I think there are probably only a couple of questions on the evidence that's been provided today from the witness. So if you have our words, which one?
Sorry, so you said there's questions about the evidence the witness has provided today, and then other sets of questions?
Well, I might have wanted to ask the witness in any case, which haven't been addressed today.
Oh, I see, yes. I'm just thinking, it's getting quite late. I've got a couple of questions as well. On one hand, leaves the witness hanging on overnight, which isn't ideal. The parties have a view on, Mr. Reynolds, start with you, and then I'll ask Mr. Dewey.
If we can have an idea of how long, if it's 20 minutes, it would make sense to push on, perhaps, I would suggest. Otherwise, if it's going to be upwards of that, maybe not.
Can I make a proposal that I'll deal with, I think there are two principal questions I had from today's testimony, which I can deal with in, let's call it 11 minutes, and that gives us a nice finish.
But what about your other questions?
Well, the other questions I guess would have to hang over.
In which case, the witness is hanging over it.
No, I think if you've got other questions, let's stop now, because it can take more than 10, 15 minutes, and then central re-examination. And my questions, we could be pushing 6 o'clock today by the time it's finished. So, anything further?
No, more housekeeping than others. But,
Are you happy with that as an approach?
Yes.
Mr. Dewey, happy with that?
I'm happy with that. I just don't know whether on the programme there are listed 2 more people to cross-examine Mr. Thomas, and I don't know if they are actually intending to do so.
Yes.
In which case it would strengthen the need to adjourn now and return tomorrow.
Yes. We've got David White
I don't wish to ask any further questions at this here. I wish to ask questions tomorrow, Mr. Keane.
Yes, that's understood. And I think Chris Brady's the other person listed.
He's not here and he's not coming tomorrow either.
No, so that's, we don't have to worry about those two. So we're not eating too much into tomorrow's timetable, but I think I'd rather not spend too much longer tonight doing things, given it's the first day of the long weekend. So I think we will adjourn shortly, but housekeeping matter?
Yes, simply seeking to give hopefully some reassurance and hopefully not reassurance out of place in relation to the timetable. Obviously we'll see how tomorrow progresses and so the reassurance may be misplaced if it's being made to overrun tomorrow. But there does appear to me and Mr. Dubin at least to be quite a significant laxity in the timetable on Thursday and Friday. Probably
Yes.
have quite a few questions for Mr. Clark, but thereafter far fewer questions. And Friday in particular, I'm not sure I have anything almost. Obviously subject to what's said, so there is some room to catch up before then.
Okay, that sounds reasonable. Good, thank you. Mr. Gilman, anything else?
I don't think so. It's only that we will be making the consortium proposals to decide over this evening whether we are going to seek permission to rely on short additional oral material with a written basis.
Yes.
Naturally, we shall show to the parties. I
If
appreciate
that's the case, sorry, I'm just sorry, I'm going to speak for Mr. Newman. If that's the case, tomorrow we're seeing in the evening, and then I'm cross-examining the consortium witness in the morning, so I'll have no time really at all to consider that. I need to see the written material this evening, at the latest really, and obviously I'll have something to say about the application if it's made.
Anything further?
if we're to do it, I can take whatever steps are possible to provide that to Mr. Reynolds sooner rather than later.
Yes, I understand that because there isn't time for prep tomorrow evening and then we're back at it early the following day, so there's great difficulties, but let's see how that comes out. Okay. Can I just check, can bundles be left in this room overnight? Okay, yes, okay. Anything else before I adjourn? No? So on that basis, at 5:22 we'll adjourn until 9:30 tomorrow morning. Thank you very much.